No.
So Xpeng is the first US-listed Chinese company, one of the first to do homecoming listings since Ship.com back in April. So, and it's quite notable because it's going to be a dual primary listing as opposed to a secondary listing like the ones we've seen before, like Baidu and Bilibili.
Welcome back, friends, for one more update from the world of EV stocks. In case you're new to this channel, please do consider subscribing. And if you live in the United States, you can get 2 free shares worth up to $1,850 just by following the link in the description. Now enjoy the rest of the video.
One major event that happened last week for the Chinese EV stocks, and not a lot of people are talking about it, is the confirmation that Xpeng is getting listed at the Hong Kong Stock Exchange. The listing of Xpeng is also a confirmation that NIO is also almost certain to get their listing in Hong Kong very soon. This is perhaps the most significant news for the stock price of NIO and Xpeng this year, and we'll try to explain why. Hong Kong Stock Exchange is the third largest stock exchange in the world, and the vast base of Chinese share investors, which currently stands at around 180 million, is growing very rapidly. Most of these Chinese investors have access to Hong Kong Stock Exchange, but not to the New York Stock Exchange. Only a few major financial firms from China such as Tencent have been investing in NIO so far. However, with the rising popularity of these electric vehicle brands, millions of Chinese investors are looking forward to invest in their homegrown brands. This is where the home listing of the Xpeng and NIO will open up the floodgates in terms of fresh buying interest, and can easily drive the share price up by a long way.
No.
So Xpeng is the first US-listed Chinese company, one of the first to do homecoming listings since Ship.com back in April. So, and it's quite notable because it's going to be a dual primary listing as opposed to a secondary listing like the ones we've seen before, like Baidu and Bilibili. That's because it only actually listed in the US last August. So it hasn't got the 2-year trading record to be able to do a secondary listing. It's also going to become basically the first of the trio of US-listed EVs, which is NIO, Li Auto, and Xpeng, to come back to Hong Kong. So it's beating the other two rivals to that. And it's going to launch probably pretty soon. It's looking like a big deal, and it's certainly coming in a busy month for Hong Kong.
And also coming at a time when there's fierce competition within the Chinese EV market.
There is, and that's why these companies are always raising money. They had this crazy share price rally last year, and obviously on the back of that, a lot of them, that includes Tesla, they raised billions of dollars through stock offerings. Xpeng also signed a credit line earlier this year for about $2 billion, if I'm not mistaken. And so it shows that it's extremely capital intensive, and there's a lot of competition. There's so many upstarts in China, which is the world's biggest EV market. But at the same time, they're still struggling to turn a profit, although revenues are rising and vehicle deliveries also are surging.
Are there more homecoming listings in Hong Kong on the cards?
There are. A lot of the big ones have been done already, but, as I mentioned, the other two, Li Auto and NIO, are also said to be planning homecoming listings. So we should be seeing those at some point this year. In addition to Tencent Music, that was also reported to be exploring a homecoming listing, as well as WeBull. So there are companies. It depends on when, on the timing and how their share price is doing in the US when they actually decide to launch the deal.
NIO is currently on a clear uptrend, and the bull run is just getting started. Most respected analysts around the world expect the Chinese electric vehicle industry to grow at an exponential pace over the next 5 years, and the likes of Cathy would believe we could nearly see a doubling of the industry each year for the next 5 years.
There's a lot of fear, uncertainty, and doubt evolving in the world out there, but we're doing a lot of original research. We have a 5-year investment time horizon. And we are truly excited about the opportunities that the last few weeks have presented us. As you know, our minimum hurdle rate of return for any stock to enter our strategies is 15% at a compound annual rate over 5 years. That's a doubling over 5 years. Well, you can imagine what has happened over the last few weeks. Market activity alone has taken that projected rate, and again, it's just a projection. We could be wrong. The world could end. I'm sure I have compliance monitoring me very carefully when I say this, so I want to say it correctly. But according to our projections, what these last 2 weeks have done is handed those who are averaging in to these sorts of strategies, any innovation strategies, a gift, because we do believe we're on the right side of change, and disruptive innovation, transformative innovation is going to deliver exponential growth trajectories for many of our companies. In fact, most of them. The growth rates are enormous, and I think some people find them unbelievable. To give you an example, electric vehicles. We expect unit sales of electric vehicles globally, including China, to compound at an 82% annualized rate during the next 5 years. Most people, when they see a number like that, they'll just say, I don't believe it. It's not possible. And the reason for that, the reason we face that skepticism often, is because of where the automobile industry is right now. It's very mature. It's not growing. In fact, we believe it has peaked. And that means all cars are in secular decline if we are right that we are moving into more of a ride-sharing, both human-driven and autonomous during the years ahead. So this idea that electric vehicle sales could grow at an 82% annual rate, just not going to believe it. And so that skepticism festers, especially, I would say, among institutional investors whose analysts on the auto sector, for example, are mostly value analysts. So there are a lot of those disconnects in the world that are creating great opportunities for us.